Hey everybody, welcome back to the channel. Today, let's go over the PM Silver Bullet on Tuesday, July 25th. So when we start this, we are right here. It just started the 2 p.m. Silver Bullet hour. And what I see first, what I do first here, when it's starting to retrace like this, so you have a failure swing here. I'm looking, I pull my fib from the bottom, from here to the top, and see where optimal trade entry is down here, and see how we're going to respect that. Okay, then I also look left. What do I see over here? Well, I see an order block here. I also see a volume imbalance right here. So I mark those on the chart, and I want to see how price is coming in. Now it's respecting this order block right here. I just wicked in. Let's see what happens here. So it wicked all the way through to the bottom of the volume imbalance, but it's traded just above. Well, it might be consequent encroachment of the order block. Alright, so that's being respected. Let's see what happens here. So this was the low that created the high. So for me to be bearish, I would need this low to be taken out. Okay. So then now that we're respecting this, and if I want to see it trade higher, then we would be looking for a potential long entries here. But I'd like to see this high cleared first. I'm going to trade just right even to it, left behind a fair value gap. Okay, so for me right now, since this is the low that would need to be broken, and it came down and respected, I have a volume imbalance and an order block here. If it trades back into this fair value gap, I'm going to take that trade and at least aim for this. If not, there's a higher time frame, 1 hour up here, drawing liquidity up here, and even further up here. So when you look at the 1 hour chart, so on the 1 hour chart here, here's where we're at right here. That's one drawn liquidity, and this is the other drawn liquidity, the 1 hour, okay? So we're obviously pulling forward, we're aiming for those, all right? Let's go back down to the 1 minute chart. All right, back on the 1 minute. So let's see if trades come back in here. We'll need to get in at discount. So from low to high, this underneath this red line here is discount. So we're going to wait for price to come down there before we take a trade. And I'll buy two. See it hit it, but I need to come down a little bit lower. Stop. All right, perfect. So I'll buy 2 contracts there. Get in. We'll put our position here. We'll aim for 1 to 2. Our stop will be below the order block and the volume imbalance right there, and this candle, but I added more to be below everything. Now we're at 2 points, and we're aiming for 6, so 1 to 3. All right, let's see how this goes. I would take a partial when it closes above this right here, this line right here. So I don't see putting it on the chart. That's what I'm aiming for right now. Usually aim for 60%, and this is about 50%, so I'd go a little bit above, but just need to close above, and I'll take one off. Okay, this is the price action you want to see. So let me take this long position off just so you can use my pointer. I want to zoom in here real quick. I want to show you something. Price action. When I'm looking at my chart, okay, when I'm seeing this is something I learned from Shadow and his Discord that I mentioned in the other one before. When I'm watching price, I'm seeing that this opened even, but then this next candle opened with a bearish volume imbalance, okay? Right here. Okay, the next candle opened, started, and it closed right there. And then this candle here opened with a bullish volume imbalance. I definitely want to see that and I want this candle to close and leaving this open, because that's a strong indication that price wants to move in that direction. Okay, so I'm watching this. To me, if it opens like this and closes it in, it's kind of a wash. But I want to see if where it closes. If it opens and closes bullishly, bearishly, it's not a great sign. depending on which way you're going. Okay, so I'm watching these little candle by candle discrepancies, see how they go. I like seeing that in our direction. Okay, so we leave behind another fair value gap here. Close. Oh. All right, I'll take one contract off here because it would have hit us, taken us out here where my limit order would have been. So just to be fair, I'm going to sell one there. Okay. Now, if price comes back in here, I would take another trade. We'll throw a fib on there. Throw the fib on from here, here. I guess you could even go from here to there. It's either or. You can go from there or you can go to here. It doesn't really matter. You guys would do this from another fair value gap. This is definitely in a discount to go there. So yeah, if it comes back in there, we would definitely take that trade. Okay, that would have entered us right there. I'm not going to use TradingView though, because I would have had to take it right here. But I am going to throw it on here saying this is where a trade would have been. A long position right at the top of that fair value gap. Candle below. And then we'd aim for the same draw on liquidity, which is the 1 hour that I showed you. It's 5 handles there. So let's see how this goes. I've already taken my partial. That was good. That took us out right there. Let's see if I can get a close thereabouts or right about there so I can actually get out of the trade. Close. I'll take that right there. Alright, so sure we got out right there actually, but we'll use this just for TradingView purposes. This one we need to get out here. We probably would have already taken a partial right here on this trade. Again, didn't do that on TradingView because I had to take it on a closed candle. It would have been right here when it wicked us in, so I didn't take that trade. But in this, if I was managing this one, once it cleared this high, closed above that high, I would be taking my partial, and then we'd be letting it go to our full TV. Break even, so there's no risk. Alright, that would have taken us out right there. So we would have been out right there. Let's see what happens here. So I want to show you something here. Now, this is where I would be looking for a potential reversal because we just cleared a high time frame on the 1 hour, a high, okay? So we just cleared a high. There is another high here that's on the 1 hour later on that we're reaching for as well. Let me show you that here. Right here. So, but if it reversed here, I'd be fine. If it took this out here in reverse, I'd be fine. I would be looking for it. But for me, right now, this would be the swing low that I'd want taken out. So we'll have to see how this plays out. Okay. So now, since it's this one, this would be the swing high that would be taken out because that's the one that created the high so far. We'll just keep going. See what happens. Okay, so for me, first of all, this would have got us out on this candle here. But there's a market structure shift right here for the downside. Okay. A wick is fine. I prefer a candle close, but obviously a wick is still good. It wicked all the way through here. We'll see what goes. There is a fair value gap right here left behind. Now, let me just tell you this straight up. If I would have been trading this here, when I took these trades, one of these two trades, and I got my partials and got my full TP, I'm not looking for any more setups. I'm tape reading at best at that point. Okay, I'm paper trading. I'm not trading with my live account to keep going back and forth, back and forth. Once I hit my goal for the day, I'm done. no matter how clean and good the setups look. So in this, if it comes back up, I would take, demo purposes for this instance, I would take a trade if it goes up into that fair value gap. Alright, so there, we're going to take 2 contracts. Let's sell 2 right there. Okay, through a short position. Here, where does it go? Above the high. 1 tick above, so we'll go here. We'll just go to this buy side liquidity here, knowing that I'm using a target that is really used as a target. So it's still only 2 points. I'm risking $100. So I'll risk the $100 for this right now. See how this plays out. Where would my let's pull the fib. Why would I also potentially like this trade? If you pull a fib from here to here, equilibrium's right here. Oh, I'm sorry, equilibrium's right here rather. I was looking at this one. We're right in the fair value gap is right in optimal trade entry zone area. I don't like the word zone. We'll use area. That's where it's at. So for me, I'm like, let's take this trade. Let's try it. Where would we be targeting? I'd be targeting this low right here, so we'll use the draw on liquidity there. I would take a partials somewhere in here, 60%. Okay. Knowing that this is a target, this could get hit, right? It's definitely a B setup at best because we didn't have a candle close above for a market structure shift. So this automatically, for me, tells me this is going to be a B setup. I prefer candle close for my A plus setups. So, and again, like I said, this bearish volume imbalance started off. Love seeing that. That's great. Okay, need a candle close around here. That's 27%. I'll take a trade. I'll take one off. Perfect. All right, so let's take one off here. Let's buy one there. Stop is now break even. I'm going to show you something on this trade. I want to see if you see where is price going back to right now? It's pulling back into what? Right? Price is going into this volume imbalance right here. Fill that in. Goes in to fill that volume imbalance in. It's respecting it, but leaving it open, but wicking it in, and then coming in. Okay. So let me take off the fib. Let's take off the short position. So those are your silver bullet trades. We noticed that price was in a bullish trend. We pulled the fib. We saw that it was coming down to optimal trade entry, respecting an order block, a volume imbalance, left behind a fair value gap. We took our trade, having additional PD raised to help support it, which was great. We ended up targeting a higher time frame drawn liquidity, the 1 hour, and we took our trade full TP with a partial. Price came back in. We didn't actually get this entry because of how TradingView goes, but we knew that this was a good entry. It was in a discount. Wick came down. We took the trade. We could have ended it at the same place. After price took out a higher time frame liquidity at this 1 hour drawn liquidity here, it took that out. We could potentially see reversals. So we followed market structure to find out where our market structure shift needed to be, and right now it was right here. Price came down. It didn't close below that, but it did wick nicely. It wicked through it. So we allowed that as our market structure shift, knowing that this is a higher risk trade. It is not an A plus trade, but it's a B setup. Price came up. We entered into the fair value gap. We had some drawdown here a little bit. Not too concerned about it. Price left us a bearish volume imbalance and kept trading down. There's another one left here. Came up and it respected that when it did a pullback. Where does price go? ICT says it goes to take out old lows or highs or fill an imbalance. So where did price do? It pulled back, came into that volume imbalance, and then hit our take profit target. So those are your 3 silver bullet setups for the PM session on Tuesday, July 25th.